What's going on, everybody? The main focus of this video is going to be the earnings call. I cut it up to where you get everything you need out of it, but I do recommend you go listen to the full earnings call if you haven't. If you have listened to the full earnings call, this video might be a bit boring for you, so you might just want to stick around for the chart for Cleanspark in a second here. I'm also going to talk about some news from Mara, and then we're going to get right into this. If you get some use out of this, make sure you like, subscribe, ring the notification bell, and let's get started. Now, first off, I want to mention that this long-term pattern we've been in has not been invalidated yet, and I want to show you another potential pattern that the market did react to, but I think the market is reacting to this line as well. So first, this blue line, this ascending trend, you'll see that we bounced off this point a few times, and then we did break it. We saw a clear reaction from the market, and we did break our long-term support here. And we created a gap down, which we do need to fill soon. I'm currently watching this orangey yellow ascending line. We did bounce off it here, and we're trying to maintain it. We had a false break, a bounce off of it, and it looks like we broke down it, but we'll see where we close here. This might end up being a level that we bounce off of. We are also oversold on the RSI. You'll see in past times when we reached this level on the RSI, we did briefly rally very soon after. I do think Cleanspark is in one of the best places to buy if you're ignoring 2022, and if you're ignoring 2023 when we bounced off the $3 zone. Cleanspark hasn't been oversold much during this bull market, so I do believe this is the times you want to take advantage of it. I also wanted to mention this. This is going to be an extremely long video, so I apologize, but I do want to mention this. Mara's planning to sell $250 million in convertible notes that expire in, 2031. They expire in 2031, and this is going to allow them to purchase more Bitcoin. They're taking a page out of MicroStrategy's playbook. I think we'll see more follow suit, and of course, as Bitcoin and the Bitcoin miners rally, we will see some dilution along the way. The smartest Bitcoin miners will do it. Alright, now the rest of this video is going to be the earnings call. I'll pop in and out of it here and there. And like I said, the full earnings will be down below. It's 30-something minutes, but let's get started on it, and I'll be back in a second.
As a result of our rapid growth, we've gone through a number of changes. Most recently, upgrading our external audit firm to a well-known, highly respected national firm, BDO. The team of BDO have been incredible in their efforts to familiarize themselves with our company as part of our first quarter together. Ultimately, as you can expect with any new relationship, sometimes you just need a little extra time. In addition, as you're reading our Form 10-Q file today, I'm pleased to announce our agreement to acquire up to an additional 22.8 exahash per second of the all-new S21 XP series of immersion cooled miners, operating at an efficiency of 13.5 joules per terahash. We've secured 7.8 exahash per second of these miners for delivery before year end, which will be going to Wyoming. This purchase will drive us even further ahead of the pack when it comes to overall fleet efficiency, which we believe will be a critical differentiator during this cycle. And as usual, we've secured the best pricing available for these units. We grew our hash rate by 4 exahash per second and delivered on our commitment to achieve 20 exahash per second by the end of the quarter. As we look forward to the end of this year, I am happy to report that we remain on track to meet and optimally exceed our target of 32 exahash per second. In line with this, it's my pleasure to announce that as of last night, we achieved 22.3 exahash per second. The post-halving environment has highlighted our strengths and adaptability, allowing us to navigate this period with confidence and agility.
To me, Cleanspark gets it. That's why I like them so much. They understand the 4-year cycle. They hodl during the bull markets, as we have seen so far. Make wise acquisitions while other miners are struggling. And despite the halving just recently taking place, and this is the first quarter reflecting it, you'll see that their revenue didn't take that much of a hit. Their Bitcoin mined didn't take that much of a hit. And this is mostly thanks to their hash rate growth and their increased efficiency. And in this industry, we definitely want the most efficient miners.
I want to highlight that our energy background has been foundational to this success. Also central to our strategy has been our distributed portfolio. This means we aren't dependent on the output from any single site or utility, giving us flexibility and resilience. Over just the past 9 months, we've expanded that strategy significantly. We've grown from operating 5 sites in Georgia to now operating more than a dozen unique sites over 4 states with several more to come. This infrastructure growth has greatly enhanced our scale and the overall value of our portfolio. I'd like to emphasize our exceptional top-line performance with total revenue of $104 million this quarter. We delivered a gross margin of 57% on this revenue. Further, the top line represents an increase of 129% over the prior year's fiscal third quarter results. Now, this success may not be easily identified on the face of our financials this quarter due to some non-cash items, including the change in fair value of Bitcoin and an impairment charge related to our current fleet upgrade cycle, which we've chosen to implement ahead of schedule. Before I get into the details, I want to call out that excluding these two items, our operational efforts paired with the industry's most efficient fleet resulted in approximately $35 million to the bottom line before non-cash items. Our long-term strategy is to remain the most efficient large-scale Bitcoin miner in the industry. Over the past year, we have secured best-in-class mining equipment at best-in-class prices. As a result, we've already upgraded a substantial portion of our fleet. And over the next several months, we expect to continue this cycle. We plan to remove all units from the fleet that are less efficient than 22 joules per terahash. I want to emphasize that the rigs being upgraded are still currently competitive and profitable. These are proactive steps to ensure our position as the most efficient large-scale miner, enabling us to withstand and, more importantly, thrive during periods of future market volatility. By removing the less efficient units now, we can maximize their resale value in the secondary markets. We are fortunate to have abundant access to increasingly scarce, low-cost, low-carbon power. By accelerating our fleet upgrade and replacing older rigs, we are getting the compound benefit of substantial increases in hash rate using the same power resources. At a time when the daily Bitcoin earnings for the next 4 years is potentially at its highest.
Cleanspark is steps ahead of the other miners. They're already upgrading their fleet, despite these still being relevant machines, and them being steps ahead gives them even more of an advantage. These machines that others might use till obsolescence and then lose a lot of value from, Cleanspark can sell in the secondary market to another Bitcoin miner that's a little bit behind them. One Bitcoin miner's trash is another Bitcoin miner's fleet upgrade. Them coming from an energy background, I think is partly why they're so successful. Let me know if there's any of you OGs from the Cleanspark microgrid days down below in the comments, and let's continue this earnings call.
We've continued pursuing M&A opportunities to strategically secure additional power contracts and infrastructure. We expect that after the current fleet upgrade is complete, we will exceed 28 exahash per second. We will then only need to bring 65 megawatts of additional infrastructure online to add the 4 more exahash per second needed before year end. With that, I'm pleased to announce that the City of Sandersville has informed us that they have resolved the issues with the substation transformer, and they expect to provide us with the final 50 megawatts of power this September. When added to the 15 megawatts that are about to go live in Dalton, Georgia, this will allow us to meet the 65 megawatts of need, adding, again, 4 exahash before the end of September. Beyond the opportunities just discussed, we also have 30 megawatts under active development and an additional 188 megawatts under binding purchase agreements, making our targets very achievable. Looking beyond the end of this year, we've identified a clear path to expanding our footprint in 2 states. In Tennessee, we have a target to reach 200 megawatts in 2025 and over 400 megawatts by the end of 2026. We also expect to continue our growth in Wyoming, where we currently have 75 megawatts under contract, but we intend to expand to several hundred megawatts in the coming years. Our conviction in achieving this remarkable goal is built upon our plan to execute a very similar strategy in Tennessee and Wyoming, as we've proudly achieved in Georgia over the past 3 years. While our trajectory in Georgia has been impressive, our recipe for success in this key market was developed as a direct result of a rapid ascent of the learning curve. Through grit and relentless hard work, we learned from each of our incremental wins as well as the challenges. Maintaining a mindset of continuous improvement, we were able to refine our formula into a blueprint for success, one which we believe optimizes the countless variables to drive maximum efficiency. The lessons learned in Georgia, whether they relate to structural design of the facilities to improve cooling efficiency, or the standardization of our site configuration to streamline operations and maintenance, reflect the impact of the many small details we paid close attention to over time. We've optimized all of these in order to gain a percentage point of efficiency here, or a point of reduced downtime there. But when employed in concert, embody the level of efficiency we constantly strive for. Importantly, each of these lessons were learned and developed with a single common element in mind: repeatability at scale. We will continue to remain highly active in M&A on our path to achieving our growth targets for 25 and 26. While M&A is an important pillar of our strategy, I want to reiterate the importance of the other critical pillar to executing these targets, and that is harvesting the significant inventory of organic opportunities before us. By deploying the blueprints for success I just described to the existing opportunities in our current portfolio of assets and other greenfield opportunities, we believe our multi-year goals are well within reach. Our efficiency ranks amongst the best in the world. A core component of our strategy is to remain the leader in energy efficiency. In our view, the winners in this industry will not be crowned simply by a measure of total hash rate, but by the ability to endure and thrive in all markets, both bull and bear. Our current fleet efficiency across the entire portfolio stands at an industry-leading 22.3 joules per terahash, while during the same period, more than doubling our total hash rate.
Next is going to be some words from their CFO, and I'm going to feature one part of the Q&A, although I do recommend you listen to the Q&A at the end of the earnings call. They talk about why they went with Grid. It was more about the connections that Grid possesses and the potential in the state that they're in. And when they were asked about the acquisition closing, what does it take? It's basically in the SEC's court, so that's what we're waiting on there. But did you hear that? An industry-leading joules per terahash. And also, before I forget, they were also talking about the potential for machines getting to 10 joules per terahash in the Q&A as well. Zach Bradford thinks this is a few years away. Well, now let's continue on.
Revenue for the third quarter came in at $104 million, an increase of 129% over the prior year. This was due to our growth in hash rate and appreciation of Bitcoin price between the periods. When comparing the immediately preceding second quarter, our revenue decreased only slightly, 7% or $7.7 million, despite the halving occurring early in the third quarter. We managed to grow our hash rate during the quarter and produced 1,583 Bitcoin, compared to 2,031 in the prior quarter. This reflects a decrease of only 22% in production, despite the halving bringing a 50% reduction in block rewards. The halving always brings challenges for miners. However, we met the halving with the most efficient fleet amongst our peers and continue a very high uptime of approximately 98%. Looking at our gross margins, for the third quarter, we had approximately $59 million in gross profit, which is an increase of $34 million or 137% over last year. When compared to the preceding second quarter, our total margins decreased from $78 million to $59 million. However, our margins remain healthy, above 50%, as the margins are directly attributable to our strong mining operations, effective power management strategy, and upgrades to our state-of-the-art machines happening throughout our portfolio. We did recognize a net loss of approximately $236 million in the third quarter, which is driven by two significant non-cash items. Foremost, Bitcoin price at June 30th was lower by almost $9,000 than where it was at the March 31st balance sheet date. This has resulted in a mark-to-market, unfavorable yet non-cash adjustment of approximately $48 million. Additionally, as Zach mentioned, we recognized an impairment on our miners. This impairment was approximately $189 million and was directly attributable to the company's strategy of upgrading its fleet to state-of-the-art and significantly more efficient miners. As you may be aware, the company purchased a large portion of our various S19 models during the bull market at prices between $60 to $80 a terahash. While these machines have served us well and helped contribute to our current HODL balance of over 7,000 Bitcoin, this impairment is a direct reflection of our conscious change in upgrading our fleet and change in our expected use of those machine models. The impairment charge brings the balance sheet carrying value of those older machines to fair value. And while we have not removed them from service yet, we expect to utilize machines to maximize use of any available megawatts or sell them for cash if the market becomes appealing. Also, as a result of our change in strategy, we expect to do fleet upgrades more often, likely on a 3-year schedule, and our updated depreciation methods reflect this. We've noted that there continue to be advancements in ASIC technology for which we will use our scale and relationships in continuing to have the top-of-the-line and state-of-the-art mining fleet in the world. This strategy, combined with our strong operational acumen, will allow us to maintain profitably even in tough times. For the third quarter, our energy cost to mine Bitcoin at our wholly owned locations was approximately $27,000. When adding depreciation and financing costs, our cost to mine each Bitcoin was less than $44,000. To note, our average revenue per Bitcoin mined this quarter was approximately $66,000. As a reminder, the all-in cost includes our wholesale power cost, transmission and delivery costs, margins, and sales taxes paid to utilities and communities where we operate. We also experienced higher than normal overhead costs, which are a direct reflection of our growth and progress. We've seen increases in legal, accounting, and other professional fees related to our active M&A efforts, including acquisitions we have announced over the past few months. Additionally, we have grown significantly as a company. We currently have over 250 employees, whereas this time last year we had approximately 100. I'd now like to turn my focus to the balance sheet, which we continue to believe is one of the strongest in the industry. We had total liquidity of $542 million as of June 30th. Of this amount, we had $129 million in cash and almost 6,600 Bitcoin, valued at $413 million. Additionally, we had $284 million of cash paid deposits on miners in transit and total assets of $1.5 billion. Our balance sheet remains strong as it has ever been, with virtually no long-term debt and substantial liquidity, which provides us with significant flexibility to continue pursuing the many M&A opportunities emerging in the wake of the April halving event according to our plans. Given our strong balance sheet, we are pleased to announce our partnership with Coinbase, which provides a $50 million line of credit collateralized by a portion of our Bitcoin HODL balance. This revolving line of credit will allow us to utilize our strong balance sheet to take advantage of opportunities in the marketplace. Also, given the significant tax and economic realities of selling portions of our HODL balance, we are able to put our Bitcoin to work while paying a low cost of capital. As we look ahead, we will continue to be focused on being the most efficient Bitcoin miner at scale on the planet. I believe our operations team is one of the best in the world, and the combination of our state-of-the-art fleet, power management strategy, and strong financial condition will allow us to take advantage of even more opportunities from this point forward.
All right, next up, I have one answer from the Q&A. I took out the question part, but the answer that Zach Bradford provides basically points out one reason why I love Cleanspark so much. They understand the 4-year cycle. They understand that you expand and you aggressively grow during the bear market. And in reality, the loss that they took for this quarter was mostly due to the impairment charge of their Bitcoin machines that they were upgrading. But hey, a loss is still a loss. And that is something we're going to have to deal with every 3 years or so, like they say, when they decide to upgrade their fleets every so often. And they did say it'll be around 3 years, but that's not an exact time frame. It's more based around the 4-year cycle. But I'll leave it there, guys. Listen to this last answer. I highly recommend you guys listen to the full earnings call. Know what you own. Thanks as always for watching. Let me know what you think about the earnings call, and I'll see you guys on the next one.
The great thing about miners themselves is their value is largely indexed also on whatever the market's doing with Bitcoin. So we execute on the strategy we've always done, which is we build in bear markets. We intend to take advantage of fleets that are in place and highly efficient during bull markets. And from there, with the capital that we access during bull markets, we should be well positioned to upgrade during bear markets. But I would expect really what we're pointing to is, we think that there's still a solid long bull cycle ahead of us. And then the next bear cycle, it'll be time to upgrade.